Hey YouTube, this is Zach with Achilles Financial. Welcome back to another video where today we're going to be talking about the economic indicators that are going on this week, a review of the economic data that came out last week, as well as the trades to watch. So just to start off, I do want to let everyone know that at the end of this week, I will be quote unquote out of the office due to a trip that I'm taking. In the meantime, I do have some interesting videos that I'm going to be uploading for everyone, including a review of the first rental property that I ever had, the process of purchasing that rental property, the time that I spent while I was living there. This is a classic strategy that for those of you in the rental world will know as house hacking. That is the process I went through, and I'm going to be pretty transparent about the financials that were associated with that transaction. I hope that you all enjoy that, but expect that later this week. That's most likely going to be my Thursday video, so be watching for that. So with that being said, let's dive into the video. Again, the reason that I have Bank of America up on the screen is because we saw a very interesting move this past week where traditionally, as you just saw that month graph, we've seen Bank of America really trading within kind of a pattern of a holding type pattern. And the only move that I've seen from them really in the course of the past month was when it was announced that, and we made a video here, that Warren Buffett had invested like $900 million into the stock. And then in the ensuing week after that, he actually purchased another $500 million. So his average cost for that, I believe, was $24. And as you can see in the top right-hand corner of your screen, the stock is paying around $26 a share. So this is a stock that, again, we've talked about on the channel multiple times, and we include it whenever we're talking about the banking rotations. And as you can see that in the past week, we saw a big rotation, and this is one that I'm somewhat frustrated that I wasn't watching for, because we caught the tech rotation really, really well. We got some good calls on tech going up, and the trade that I made or in the middle of last week, I bought some TSM calls because a lot of the chip stocks had gone up, and then I doubled down when they started dropping, so I got a few more of those TSM calls. And last time we saw the banks rotate up, we played tech. This time when the tech stocks rose up, we did not play value. So a little disappointed that I missed this, but again, happy because this is a long-term share that I hold both in my 401k as well as just my normal shares. So big fan of Bank of America as a whole. The reason that I highlight this is because we did see a big rise in tech stocks at the beginning of last week, and then we saw some value stocks at the end of last week. So just to highlight kind of where we are in the market perspective, this is the market as a whole over the past 6 months. I'm actually going to make that over year to date, just so we can see that we are rapidly approaching all-time highs right here. So as you can see right now with our price of 334, the all-time high was back here about this point in time, which was like 339.08 is what the study on the left-hand side is showing me. My personal opinion is, particularly with the current executive actions that happened yesterday, and yesterday was August the 8th, a Saturday, where President Trump did sign into legislation some work considering payroll tax deductions as well as a few other items. That being said, the expectation here is I think that the market's going to take that positively. Admittedly, I think there's going to be some tension between Congress as well as ongoing tension with China, but a lot of people are bullish. This is very similar to what I would describe as the tech bubble in year 2000, where the market keeps going up, up, and up. A lot of people have money and time on their hands, so they're throwing their money in the market because right now the market only goes up. And the reason that I say that is because, as we've seen, there are some winners and some losers in this market. But even last week, we saw some highly rated tech stocks that just sold off pretty quickly. So I think we're going to start to see some winners and losers develop. People are going to take some big losses. I don't think that's going to happen this week. I think we're going to see some all-time highs. Now, is that representative of the economy as a whole? I don't believe so. I think that that's largely going to be representative of a few companies doing very, very well. You have to remember that Microsoft, Apple, Amazon all make up 25% of the S&P 500. So we're going to be watching that. That's what we're going to see, and that's what we see here. Just one thing that I did want to highlight for everyone here, because I've talked about the difference between the desktop version as well as the computer version, or rather the web version of Thinkorswim. So this, what I have here on the screen, is the web version, and I do want to showcase what the desktop version looks like. So as you can see here on the screen, this is Bank of America. You can see all the information, the dividends, the highs, the lows. As you can see, we've got some studies here on here. The reason that I highlight all of this is because this is a lot of information. I consider myself a casual investor who watches the markets more than most because it is related to what I do for work. And that being said, that a lot of this information, while it is good, it is a little overwhelming. For this reason, I very often will stick with the web version of Thinkorswim when I'm executing trades. For the most part, my options trading is a little bit more action-packed than my passive investing, which is where I try and build out positions in my various stocks. So this is just what we're looking at. This is why I don't particularly use that. Now let's go ahead and dive into the economic indicators we're going to be looking at this week. So as you can see here on the screen, we have our economic events. This is on TD Ameritrade, my favorite trading platform, and the owner of Thinkorswim, which is the two platforms we were just looking at on the web version and the desktop version. As you can see, I've largely skipped what we have at the beginning of this week. It's not that I'm trying to hide anything. It's really just that none of these are really market movers. Even Consumer Price Index, which is CPI, I just don't think that's going to change anything. You may see a move on oil for the crude oil inventories, but even then lately it has not been moving the oil market. So that being said, what we can expect to see is going to be the initial claims and continuing claims. As we saw last week, the unemployment rate came in lower than expected. That is good. I do want to highlight the fact that that unemployment rate is still higher than any other point in time since World War II. So keep that in mind. Keep remembering that just because the unemployment rate has dropped nearly 4% from its high, it still is not a good place and is not very good. So that being said, these two have the potential to move the market if they surprise in a negative fashion. That can happen, although I don't anticipate it will right now, but it can. So just be watching those announcements on Thursdays. Those will happen before the bell at 8:30 Eastern time. Friday has one that can be impactful, and that's largely going to be retail sales. Lower down here, a lot of the business inventories, capacity, utilization, industrial production. These are items that economists like to look at, but from what I've seen, what I've experienced, they don't always move the needle in terms of the broader market. They may have industry effects. Retail is going to be important for a lot of our retail stocks. As someone who doesn't play a lot of the retail stocks, or I personally, outside of like ETFs or mutual funds, I do not own or have any exposure in the retail space, but this is an area to be watching. So that being said, these are going to be our economic indicators for the week. It's relatively a lull in what we're used to because last week is one of the bigger weeks with economic data, in particular that unemployment rate. So this is what we're looking at this week. I'd like to see a rotation back into tech. I do think we're going to have that as some of the winners. I also want to encourage everyone to be looking at gold and silver. I think those are great short term, and by short term I'm meaning like 1 month holds right now, or potentially even longer. But those are ones that I'm looking at. Although I haven't made any decisions, I will update you when I do. So that is the end of today's video. If you enjoyed it, please drop a like down below. And if you are new to the channel, please subscribe. I appreciate you guys, and I will talk to you all later. Thanks.